you got to remember, like March 2020, we were at less than 10K per Bitcoin. Obviously now making its way back up to 50K. I think we're still in the middle of actually a pretty significant ongoing bull run. So backstopping this, I think it's institutions. We've been working on this, for the last 10 years, and I think it's paying off. The questions, that face entities like ours are getting answered, from security to regulatory compliance to insurance, et cetera. We have not seen any retreat on institutional interest.
Welcome back, everybody, to Altcoin Daily, where you subscribe because you're interested in making money with cryptocurrency, and this channel keeps you informed. My name's Austin. In today's video, I have major news involving Ethereum, involving Bitcoin, Cardano, XRP, and much more. Like always, check the timestamps down below in the video description, and let's jump in. That was, of course, co-founder, CEO of Gogh, explaining that institutional demand for cryptocurrency into September is only getting bigger. And that is his business. He would know, technically. But me personally, I always want to see the statistics. Prove it to me. Show me the data. Well, update number 1 out of 5 in today's video. Chainalysis just put out a very detailed report showing the metrics. And in terms of demand, specifically from DeFi, it's shocking. The growth of institutional DeFi activity as a share of total volume is shocking. So this is showing the data from the last 4 full quarters we've had, Q3 2020, Q4 2020, Q1, and Q2 of this year, 2021. And to be clear, it is not showing total volume, but instead, who is taking up share in that volume depending on the quarter. So we have small retail, large retail, professional, institutional, and then large institutional. Look how the market's trending. For example, checking out Q3 2020 last year, we can see that professional traders heavily dominated volume in the crypto market, and number 2 was actually regular institutions. Large institutions really weren't here yet, retail really wasn't here yet, small retail still waiting. And how we have trended since, large institutional investors have only gotten bigger. And it's not to say that retail hasn't. We have way more retail in today than we did last year in 2020. But based on total share of the volume, large institutional investors are where we're seeing the demand. If you appreciate seeing the actual data, give the video a like. And as I said earlier, this is just the first update out of 5 today. Story number 2, if you hold Bitcoin, the ecosystem is growing. Square's Jack Dorsey plans to build a decentralized Bitcoin exchange. So all the success we've seen with the Ethereum ecosystem, the dApps being built around that, like Uniswap, for example, on ETH, some of the most successful tech minds in the space are aiming to bring that to Bitcoin. Square and Twitter CEO Jack Dorsey tweeted Friday that TBD, which is the name of payment giant Square's new division focused on creating an open developer platform, is planning to build a decentralized Bitcoin exchange. In the direct tweet, help us build an open platform to create a decentralized exchange for Bitcoin. And why are they doing this? Well, Mike Brock, who is named the lead of this initiative, tweeted separately that this is the problem we're going to solve. Make it easy to fund a non-custodial wallet, which is any personal wallet, a Ledger, a Trezor, a MetaMask. Make it easy to fund a non-custodial wallet anywhere in the world through a platform to build on and off ramps into Bitcoin. You can think about this as a decentralized exchange for fiat. And I would love this, because personally, if you want to buy and sell Bitcoin, yes, you can do it peer-to-peer, but really you got to go through a centralized exchange for Bitcoin. Unlike with Ethereum, where there's just MetaMask and Uniswap. The Bitcoiners want that, so the Bitcoiners are building it. We would love for this to be Bitcoin native top to bottom. He also noted that the platform would be entirely developed in public, open source, open protocol, and that any wallet would be able to use it. So give me your thoughts down below. But this infrastructure, combined with the clarity of regulation, this is why institutions now feel more comfortable than, let's say, a year ago to enter the space. Progress is happening. And third piece of news out of 5, we've talked about infrastructure with Bitcoin. Now let's talk about demand we are seeing right now for Ethereum. Bored Ape Yacht Club sells $96 million of their new NFT line, Mutant Ape NFTs, sold out in less than 1 hour. So the NFT project sold 10,000 Mutant Apes for 3 ETH each yesterday, and now all of them, of the 10,000, are selling for double. So because of this ongoing NFT craze, Ethereum block space is still very much in demand. And to be clear, with these new Mutant Apes, they sold 10,000 of these Mutant Apes in a public sale, which sold out in less than an hour, and they also airdropped an additional 10,000 vials of Mutant Serum that let existing holders of the Ethereum-based Bored Ape NFTs mint new apes for free. So check this out. You could either buy these Mutant Apes, or if you had an existing one, you were airdropped a serum and then mint an entirely new NFT to add to your collection. Holders of the Bored Ape non-fungible tokens were airdropped one of 3 serums, M1, M2, or Mega Mutant M3. If a Bored Ape is injected with either M1 or M2 serum, the resulting mutant ape retains traits of the original ape. Like this, right here, we can see, although one is a mutant, there are similar traits. The M3 serum creates a completely different ape with potentially rarer and therefore more valuable traits. And this was a big success. The mutant apes, claimed either for free by hodlers or bought for 3 Ethereum each in a public sale, now sell for a minimum of 7 Ethereum each, or $22,000. So Ethereum continues to dominate. Give me your thoughts down below. And let's keep moving and talk about up-and-comer Cardano. The Cardano Foundation has just announced up to $10,000 in rewards for hackers who can find ADA vulnerabilities. So Cardano wants to flush out any weakness, and they're launching this bug bounty program to do that. The Cardano Foundation is launching a bug bounty program that offers hackers rewards for finding any weaknesses in the smart contract platform's blockchain. In a blog post, the Swiss-based Cardano-focused nonprofit says that they're teaming up with HackerOne, a vulnerability management firm that uses hackers to expose cybersecurity flaws. And here is that direct quote from HackerOne. Over the coming months, together with the Cardano Foundation, our joint bug bounty program will use the power of HackerOne's ethical hackers and diligent procedures to help us ensure that the Cardano blockchain is the most stable and secure blockchain possible. The Cardano codebase will be tested for any performance bugs found which represent a critical vulnerability or potential exploit to core Cardano components. Through a bug bounty program, ethical hackers are incentivized to find vulnerabilities and responsibly report them so they can be fixed before serious damage is done. Cardano is hitting this head on as we lead up to the September 12th launch of smart contracts. I'll keep you updated. And next piece of news, next update involving Ripple, XRP versus the SEC. Ripple files a motion to expose the XRP holdings of SEC employees. So reportedly, now the SEC has until September 3rd to reveal what their employees hold to the courts. I think that the mindset here is that if you let your employees back in the day buy, sell, and trade XRP, why would you let your employees do it but not the American public? A new motion document seeking to bring clarity to whether the SEC did or did not permit its own employees to trade XRP, which, as per the SEC's allegations, is an unregistered security, is now in question. The motion seeks to compel the SEC to provide anonymized documents reflecting trading pre-clearance decisions, not only for XRP, but also Bitcoin and Ethereum. And they're not trying to dox anybody. You could redact the names, you could just put that data in an aggregated form, but they want to know generally what is that information. Give me your take on this down below. If you're a lawyer, if you have practiced law, I'd love to know your take, because I don't know, don't employees, even if you are an employee of the SEC, don't you have freedom to invest in anything you want, even if the SEC hasn't declared their stance on it? I'm not sure. Next piece of very quick news for BNB. Crypto exchange Binance to auction off a Vinci and a Van Gogh NFT. And this is interesting to me because they could have chose any NFT platform to launch off of, but the museums or the foundations in charge of these historic pieces of art are launching their NFTs with Binance. Binance NFT Marketplace has today announced its partnership with the State Heritage Museum that will see the platform auctioning off a digitized collection of the world's masterpieces from the museum's main exhibition. So they will be selling a total of 5 NFTs with a copy of each NFT also remaining at the museum. So you'll get one if you buy it, and the museum will keep one. This includes Vincent van Gogh's Lilac Bush, also a Claude Monet, also the Madonna and Child by Leo da Vinci. So if you hold BNB or you're just a fan of the Binance ecosystem, you'll love this. Each NFT is set to be auctioned off on August 31st during the Binance NFT Marketplace event, coming out with a starting bid of 10,000 BUSD, Binance's stablecoin, or roughly $10,000. Let me know if anybody in this audience will be putting in a bid for Van Gogh. And that is the video. My name's Austin. Like always, see you tomorrow. Appreciate you. Really appreciate you.